12 stocks, 9 sectors, 3 months of investment, 1 portfolio. Let's see how the portfolio looks after 3 months of investment in Simple Trade. Hi everyone, welcome to another video on Canadian dividend income investments. Today I'll be going through my portfolio, where the portfolio stands after the investment for the month of March, a quick visit on the holdings that I have, and the dividends I received in March. Currently, this TFSA account is worth around $2,427, of which $509 is the cash that is available for investment. I have a total of 12 stocks in my portfolio, and the total investment, that is the book cost, is around $1,796. So by looking at the overall performance of the portfolio, I have a gain of $127. Last month, there was a pullback from the market, and so evidently the performance is not good compared to my all-time performance. Now, let's have a look at my individual stocks. The first stock that I have here is Algonquin Power and Utility Corp. They are one of the leading renewable utility company and belongs to the sector utilities. I have 10 shares at the price range of 19.75 and with the gain of around 4%. They are a good dividend yield company. They pay out the dividend quarterly in the month of Jan, April, July and October. Bell Canada. It's a media company that provides wireless, wireline, internet and television services. It belongs to the sector communication services. I have 3 shares at a price of 55.50 with is around 4% gain. They are also a very good dividend yield company. Just like AQN, they also pay dividend in the month of Jan, April, July and October. The next company is Canadian National Railway. It is Canada's largest and North America's 5th largest Class 1 freight transportation company. I bought this stock at a very good price of $131.75, so it gives me around 11.09% of gain. Unfortunately, I only have 2 shares. They're not that good for dividend, but it's a very good growth company, and I made a video on CP Rail and KCS merger, and if that goes through and CP split the stock by 5:1, then I will focus my attention mostly on CP. I have made a video on that. You can see the link here. But either way, CP Rail or Canadian National Railway is a very good stock to hold for life. The next stock is an income fund, which is a closed and balanced fund called Canoe EIT Income Fund. I bought this stock mainly for one reason, and that is their very high dividend yield. They pay out the dividends monthly, and I bought it almost at the same price which it is trading right now. So I don't have much of a gain as such, but I'll keep on buying this stock because of its dividend. Keyera Corp is an energy, oil and gas midstream company. It owns and operates raw gas gathering pipelines and processing plants. And they are a very good high dividend yield company. And I bought 5 shares with an average price of 25.03. That gives me around 4.79% of growth. If you look at the 5-year mark, they dipped a lot during the COVID, but it's slowly gaining the momentum. They also pays dividend monthly. The next company is Labrador Iron Ore Royalty Corporation. It's a company that produces and processes iron ores at Labrador City, Newfoundland and Labrador. This belongs to the sector basic materials. I have 4 shares at the price range of $35, currently sitting at a gain of 4.74%. They have a very good dividend yield and pays dividend in the month of January, April, July and October. The next company is Pembina Pipeline Corporation, another energy, oil and gas midstream company. They also pays a monthly dividend just like Keyera. And just like Keyera, like if you look at the 5-year chart, they dipped a lot during COVID. I have 4 shares and has the price of 35.57 with an average gain of 3.15%. The dividend yield is 6.85 and is a monthly paying company. The next company is Ryokan Real Estate Investment Trust, which is a REIT, and they owns and manage and develops retail focused properties and is one of the Canada's largest real estate company. I have 5 shares and I bought it at a very good price, and as a result I have around 17% gain right now. But unfortunately I only have 5 shares, and this is one of the company that I'm gonna add more to it. They also pay a monthly dividend. TransAlta Renewables, which develops, own and operates renewable power generation facilities. It belongs to the sector utilities. I have 10 shares at a price range of $19.65 and hence sitting a gain of around 5.37%. This company is also a very good dividend yield company and pays out the dividend monthly. The next company is Sienna Senior Living Inc. It belongs to the healthcare sector. I bought this company for two purposes. One, to diversify my portfolio into the health field, and second, for its very good dividend. Sienna Senior Living Company provides senior living and long-term care services in Canada. They also pay out monthly dividend. I have 8 shares at a price range of 14.37 Canadian dollars. The next company is Smart Centers Real Estate Investment Trust, another REIT, one of the Canada's largest fully integrated REITs, mainly focuses on retail properties but also expanding to rental apartments, condos, senior residence, hotels, and storage facilities. They have a very good dividend of around 6.63%. I have 5 shares at a price range of 23.90, which gives me a very good gain of 15.73 so far. This would be another stock that I'll keep on buying. So the next is XIU, which is iShare S&P TSX 60 Index ETF. This is the only ETF that I have in my portfolio right now. I bought it around $26.27, 5 shares, and so sitting at a good gain of 10.03%. This ETF is the first ETF in the world, and they have major holdings in financial sectors. Under the top 10 holdings, 4 of them are banks like RBC, TD, BMO, and Scotiabank. They also have very good stocks like CP and CNR, Shopify for its growth, TC Energy, and Enbridge for its dividend. They pay out the dividend in the month of Jan, February, May, August, and November. Now let's have a look at the dividends that I have earned in this month of March. I got dividend from TransAlta, CNR, Pempina, and the two REITs SRU and Ryokan. If we add all the individual dividends in the month of March, it will come around $4. And if you look at February, I just got dividends from two stock, and that sums up to around $1.37. So on a month-to-month basis, I have got a very good gain. That is the beauty of dividend investment. As you keep on investing, your month-to-month dividend earning will also increase. Now, a quick look at how diversified the portfolio is. For this, I'm using a website called Track Your Dividends. It's a great free website to track your dividends and to do much more. If you are interested in this website to know how you can set up your portfolio, I have a video specifically for that. You can find the link here. Obviously, when you look at my portfolio, I have a major share in utility sector. And the reason for that is Algonquin and TransAlta Renewables. For the last couple of weeks, the price of these two stocks went down, and as a result, I started buying those stocks. And that is the reason why you can see that the percentage is high. The next one is industrials, and that is mainly because of CN Railway. I have only two stocks of CN Railway, but the price of CN is very high that it takes up 15% of my portfolio. I do have considerable amount of stocks in the energy sector and in the REIT sector, which I am happy with it. The one that I want to improve is financial. Right now, I only have Kanui Income Fund as financials. but I want to actually increase this percentage to 25 to 30% by investing in mostly on Canadian banks. So that is it from my side for today. I'll be buying a couple of stocks next week and I will be creating similar videos for that. So till then, enjoy the warm weather, stay safe, and if you like my video, please give a thumbs up and subscribe. Bye.